Throughout his 75-year career, Warren Buffett has navigated over a dozen major market crashes, from the 2000 dot-com bubble to the 2008 financial crisis and the 2020 COVID-19 shock. His success does not stem from predicting market bottoms or gambling on luck, but from building a fortress of assets long before a crisis occurs. This fortress is built upon four essential pillars. Cash, the ammunition. Buffett views cash not as a long-term investment, which loses value to inflation, and hung as ammunition and a right of choice. While others stay fully invested during market highs, Buffett maintains massive cash reserves, between $20 billion and $150 billion at Berkshire, to buy great businesses at bargain prices when panic strikes. Strategy. He recommends keeping a 6-month emergency fund for living expenses and maintaining 10% to 30% of investable assets as dry powder to act when others are fearful. High-quality businesses. True wealth comes from owning companies with a moat, a competitive advantage like a strong brand or scale that is nearly impossible to copy. The Coca-Cola example. Buffett held Coca-Cola through 5 major crises because people continue to consume essential products even in a recession. Criteria. He seeks businesses with real cash flow, not just accounting profits, trustworthy management who think like owners, and products that people truly need rather than luxury items that are easily cut during hard times. Bonds, the shock absorber. Bonds, particularly high-quality government bonds, provide stability when the stock market plunges. They act as a shock absorber, reducing the overall volatility of a portfolio. Allocation. A general rule of thumb is to keep a bond percentage approximately equal to your age, e.g., 30% at age 30, increasing this ratio as you get older to protect your quality of life near retirement. Real assets, the tangible foundation. These are assets with intrinsic physical value that do not disappear based on market sentiment or fluctuating faith. Farmland, one of Buffett's favorites because it produces crops regardless of the economy. People never stop eating. Real estate, this can be a stable source of income if located in desirable areas and owned without excessive leverage, debt, Physical infrastructure, owning parts of railroads or utilities provides value because these services continue to run and generate cash flow even if the stock market remains closed. The core philosophy. In 2008, while the world was in a panic, Buffett was able to invest billions into Goldman Sachs and General Electric simply because he had prepared in advance. Wealth is not a race of intelligence, but a reward for survival and discipline. By maintaining these 4 pillars, an investor doesn't just survive a crisis, they use the crisis to grow even stronger. Analogy for understanding. Building this asset structure is like constructing a stone fortress with a deep well and a full granary before a long winter. While others are caught outside in the storm, searching desperately for shelter, you are safe inside, not because you predicted when the snow would fall, but because you built a home strong enough to withstand it.